Hello, welcome to the video for filing officers of the Form 700 presented by the External Affairs and Education Division of the Fair Political Practices Commission. This video provides general guidance to filing officers on their required duties under the Political Reform Act. The information provided in this video is taken from the Political Reform Act and FPPC regulations. Advice is often fact-specific, so you should not rely on this video alone. We recommend that you also use the Form 700 instructions, reference pamphlet, and FAQs, which are available on the FPPC website for additional guidance. And of course, we are available to help if you would like to call or email us with your questions. Note that the Form 700 is also referred to as a Statement of Economic Interest, or SEI. Before we get into the filing officer duties, here is a brief history of the FPPC. In 1974, California voters passed the Political Reform Act. The act created the FPPC to administer and enforce these new laws and inform and assist candidates, treasurers, public officials, and filing officers in complying with these new laws. The act requires detailed reporting and tracking of campaign and lobbying activity, and requires that public officials disclose their economic interests that may be affected by their decisions they make as a public official. This transparency helps the public identify potential conflicts of interest and holds public officials accountable, reminding them their primary duty is to serve the public's interest and not their own. The Form 700 is the tool used by public officials to disclose their reportable economic interests. This is an overview of the material that we will be covering today. We describe the purpose of the Form 700, briefly touch on the FPPC's new electronic filing system, discuss the different types of filers, talk about how your agency's conflict of interest code relates to the Form 700, go over your duties as a filing officer, the notification guidelines, and due dates. We will then go into more detail about your log, reviewing the statements, how to request amendments if necessary, how to handle non-filers and late filers, providing public access, and the statement retention rules. At the end of the presentation, we hope that you will feel more comfortable with and have a better understanding of your duties as a filing officer. What is the purpose of the Form 700? One of the main purposes of the Political Reform Act is to ensure that public officials are making decisions in the public's interest and not their own. A public official may not make, participate in making, or influence a decision in which he or she has a financial interest. Form 700 is the tool used by public officials to disclose their financial interest that may be affected by their public official decisions. This ensures that the public is aware of a public official's financial interests and also reminds the public official of potential conflicts. FPPC recently launched an electronic filing system for the approximately 25,000 filers whose original statements were previously forwarded to us as paper filings. Generally, these include state agency heads and 87-200 filers, which we will discuss shortly. Such filers may now file their Form 700s using the FPPC system. Filers whose original statements you retain at your agency cannot file using the FPPC's electronic system. As filing officers, it is very important to keep the contact information for your filers current in the FPPC's electronic filing system. The system will automatically notify these filers of their filing deadlines as long as a working email address is stored. Note that if your agency has its own internal electronic filing system, all of your filers will continue to file through your system instead of the FPPC system for the 2017 filing season. All agencies have the option of adopting an electronic filing system for filers whose statements are retained by the agency. For more information about getting your own electronic filing system, go to the Guidance for Filing Officers page on our website under the Learn tab. There are two main types of Form 700 filers: designated employees, also called code filers, and 87-200 filers. We will discuss designated employees first, as these will likely be the vast majority of your filers. We will then move on to 87-200 filers and other types of filers, such as alternates and designee board members, new positions, and consultants. It is important that filing officers understand the relationship between the Form 700 and their agency's Conflict of Interest Code. All state and local government agencies must adopt a Conflict of Interest Code. The code identifies positions within the agency that make or participate in making governmental decisions. Individuals in these positions must file the Form 700. The code also includes disclosure categories for each designated position. The disclosure categories describe the types of economic interests an individual in a particular designated position must disclose. These categories must be tailored to the duties and decision-making authority of the position. For example, an executive director of an agency has broad decision-making authority, so he or she will likely have full disclosure. This means he or she would have to report all economic interests located in or doing business in the agency's jurisdiction. But an information technology manager will likely be assigned limited disclosure and may only be required to report technology-related economic interests. For example, he or she would be required to report Microsoft stock, but may not be required to report stocks in Coca-Cola, while the executive director must report both. 87200 filers are the second type of filers. These are generally your high-level officials, many of whom are elected. While designated employees are required to file pursuant to your agency's Conflict of Interest Code, 87200 filers are required to file under state law. These positions are listed in Government Code Section 87200 of the Act. All 87200 filers are subject to full disclosure, which means they must disclose all reportable economic interests within California. For boards and commissions that appoint alternates, designees, and ex officio members, be aware that these individuals must file statements just like regularly appointed members, even if they are not paid and do not vote. Remember to add these filers to your log and track their filings just like any other filer. Newly created positions that make or participate in governmental decisions must file an assuming office statement within 30 days under your agency's broadest disclosure category, unless you provide for more limited disclosure. We recommend that you use the Form 804 to document information about new positions that must file Form 700 and have not yet been added to the Conflict of Interest Code. The new position is identified and an existing disclosure category from the agency's Conflict of Interest Code is assigned. If, based on the duties of the new position, there is not a current category applicable for the position, disclosure requirements should be assigned based on the duties and decision-making authority of the new position. You can see in the example above that the data processing manager was assigned an existing disclosure category. But different disclosure requirements were assigned for the licensing director as none of the existing categories applied to that position's duties. Use of the Form 804 promotes uniform reporting among agencies. Maintain this form in the same manner as your Conflict of Interest Code. It is not forwarded to the FPPC. Some agencies contract with outside entities for certain jobs or projects. Individuals who qualify as consultants under the Act are required to file Form 700 just like any other designated position. They trigger assuming, annual, and leaving office statements. Your Conflict of Interest Code should specify who within your agency makes the determination as to which individuals meet the definition of consultant and what their disclosure category should be. FPPC Regulation 18700.3 defines consultant under the Act. Again, that is Regulation 18700.3. We recommend that agencies use the Form 805 to designate which consultants must file and to assign appropriate disclosure levels. The Form 805 should be maintained with your Conflict of Interest Code. It is not forwarded to the FPPC. In accordance with FPPC Regulation 18115, Form 700 filing officers must notify individuals of filing obligations, provide form or link to the form, ensure that statements are timely filed, maintain a tracking log, review completed statements, provide public access, and refer violations to the FPPC's Enforcement Division. As mentioned earlier in the webinar, if you are already using your own electronic filing system, for now, all of your filers will continue to file through your system. To avoid confusion for you and your filers, automatic notifications from the FPPC's system have been disabled until further notice. So at this point, your duties remain the same. For statements you retain, you will continue to keep your filer's information current in your system, review the statements, request amendments if necessary, assess or waive late fines, refer non-filers to FPPC's Enforcement Division, and provide public access to the statements. Even though your filers, whose statements are forwarded to the FPPC, will continue to file using your agency's electronic filing system, please be sure to keep the information for those filers current in the FPPC system. That way, when these filers begin filing electronically through our system, the information will already be up to date, helping to ensure a smooth transition. Most importantly, please make sure there is a current email address so that the filers can be notified automatically. Until further notice, continue to forward PDF statements for these filers to the FPPC at the email address on the slide. Update FPPC about the status of these filers. For example, if a filer misses a deadline, please let your FPPC contact, Renee Robertson, know so she can follow up with the non-filer. You must also provide public access to these statements. If you do not have an electronic filing system, your duties for the statements you retain are to notify your filers of their filing obligations and provide the Form 700 or a link to the form, date stamp all statements upon receipt, maintain a tracking log to ensure that all required statements are filed, review the statements, request amendments if necessary, assess or waive late fines, refer non-filers to FPPC's Enforcement Division, and provide public access to the statements. For your filers, who will now be using the FPPC's electronic filing system, you just need to keep the filer's information current in the system and provide public access to the statements. If the system does not include an email address for your filer, it will not send automatic notifications, so you must notify the filer in the same manner you notify your internal filers. In addition to 87200 filers listed on this slide, generally statements filed by your agency's head are forwarded to the FPPC. Check your agency's Conflict of Interest code to determine if other statements are also forwarded. For board and commission members, if the code indicates that the original statements are retained by the agency, you must send copies of those statements to the FPPC at the email address shown on the slide. Remember that individuals in these positions should now be filing electronically through the FPPC system, unless your agency has its own electronic filing system. We recommend that you notify your filers of the annual Form 700 requirement at least 30 days prior to the deadline. You can notify your filers by email, mail, or in person. Be sure to provide the form or a link to the form. If you are emailing your notifications, we recommend that you also provide links to the Form 700 reference pamphlet, FAQs, and gift fact sheets. Don't forget to provide your designated employees with a copy of their disclosure categories. Remember to notify persons serving in acting or interim positions and alternates and designees and ex officio board and commission members. These notification guidelines, as well as sample language for notification letters, are on our website under the Guidance for Filing Officers tab. Form 700 is used to file assuming office, annual, and leaving office statements. Annual statements for most filers are due by April 1st each year. Filing deadlines are extended when they fall on a weekend or an official state holiday. The only other way a deadline may be extended is for a filer serving in active military duty. Although the annual filing season is certainly the busiest time for Form 700s, you must notify assuming and leaving office filers throughout the entire year. We recommend that you have a system in place where your Human Resources Division notifies you when filers assume and leave office so that you can timely notify them of their filing obligations. Assuming and leaving office statements are due within 30 days of assuming or leaving office. For statements received by mail, the postmark is considered the date filed. So if you receive a statement after the deadline, keep the envelope or a copy of the envelope with the statement. An individual who assumes office in the last 3 months of the calendar year and files an assuming office statement is not required to file the annual statement due in April of the following year. Generally, a filer who moves from one designated position to another within the same agency is not required to file an assuming or leaving office statement. The filer will just continue to file the annual statement. In most cases, this is true even if the filer's disclosure category changes. If you have questions about either of these exemptions, please call us or send us an email. Let's see if you can answer this question correctly. Your supervisor is away on vacation and calls asking for an extension for filing the annual Form 700. You would A. Grant a 30-day extension. B. Arrange a flight home. C. Explain that the statement must be postmarked no later than the April filing deadline. The correct answer is C. Other than a deadline falling on a weekend or an official state holiday, or a filer who is on active military duty, there are no provisions for extending filing deadlines. Not even the FPPC can. Whether you assess or waive the fine is determined by your agency's policy. We will discuss late statements later in the presentation. You must keep a log to determine whether required statements have been filed. This is a sample log that not only meets your filing officer requirements, but also provides a valuable tool that you can use to track filings. You may use any format that works best for you to track your filers. The log is a public document and must be made available upon request. For this reason, we recommend that you do not include personal information such as a home address. You are required to facially review each of the statements you receive that are retained by your agency. You are basically making sure that the cover page is complete and accurate, the filer's name and address, the correct period covered, the correct type of statement, and an original signature is included. If Part 4 indicates that a specific schedule is attached, confirm that the schedule is indeed attached. You are not required to review statements that are forwarded to the FPPC. If a statement does not pass a facial review, you must conduct a full review. For example, if a filer indicated in Part 4 of the cover page that Schedule B was attached, but it was not, a full review must be conducted. In addition, for the statements of which you retain the original, you are required to perform a full review on 20% of timely filed statements, at least half being selected at random, and a full review on all late statements. We recommend that a full review is performed on all assuming office statements as well. If you do not have a large number of filers, you may want to perform a full review on all filed statements. Keep in mind that when you are reviewing, you are looking for missing information, such as having fair market value not being reported. You are not required to conduct an investigation. The Review Guide Amendment Request Form, shown on the next slide, is a very helpful tool. It makes reviewing the statements simple. Plus, it can be used to request amendments. This slide shows a partial view of the Review Guide Amendment Request Form. As you can see, it provides guidance as to what you are looking for as you review the statements. If something is missing, you can simply mark the applicable circle and use the form to request an amendment. You do have limited discretion on requesting amendments. For example, if a filer reports an investment in IBM that doesn't report the business activity, you do not need to request an amendment if that is the only thing wrong with the statement. Common sense tells us that the general public knows the type of business performed by IBM. Also, keep the filer's disclosure category in mind. For example, if a filer, according to his or her disclosure category, does not have to report real property interests, you would not need to request an amendment if the filer completes Schedule B, the Interest in Real Property Schedule, incorrectly. This is an example of a completed cover page. Date stamp each Form 700 you receive. Once the form is date stamped, the form may not be altered. In Part 1, a filer can expand the Form 700 to include additional agencies as long as they file originally signed copies with each filing officer. Make sure the statement is signed, as an unsigned statement is not considered filed. Please advise filers to use their business or agency address since the form is a public document. Schedule A1 is used to report investments with a fair market value of $2,000 or more in which a filer's ownership interest is less than 10%. This includes a spouse's or registered domestic partner's investments. The most commonly reportable investments on Schedule A1 are stocks. The most common errors include the filer not marking the fair market value, reporting a managed account instead of itemizing the stocks held through the account, attaching financial statements instead of completing the schedule, and reporting an investment in a partnership but not reporting income from the partnership in Schedule C. In this example, the entry for Comcast is complete. The general description of the business, the fair market value, and the nature of the investment are all included. Note that the acquired and disposed of dates are only required if an investment was acquired or completely disposed of during the reporting period. So, if these are left blank, you can assume that that is not the case. The second entry, however, would require an amendment request. The filer listed Charles Schwab, an investment management firm, instead of itemizing the stocks held through the account. Generally, diversified mutual funds and investment vehicles that are substantially similar to mutual funds are not reportable. If your filers have questions about whether or not a particular investment needs to be disclosed, they should email or contact us directly. There is an Excel version of the Form 700 on our website. This can be very helpful for filers who have multiple interests to report on one schedule, such as several stocks reported on Schedule A1. Also in this format, the filer can save the information for future use. Schedule A2 is used to report investments with a fair market value of $2,000 or more in which the filer's ownership interest is 10% or greater. This includes a spouse's or registered domestic partner's investments. It is also used to report trusts. The most commonly reportable investment on Schedule A2 is a filer's or spouse's or registered domestic partner's own business or partnership. The most common errors include fair market value not reported, gross income received not reported, failure to disclose client's income of $10,000 or more, and precise location of real property not reported. In this Schedule A2 example, there are two errors that would trigger an amendment request. In Part 3, filers must list the name of each reportable source of income of $10,000 or more to the business listed in Part 1, or mark the None box. It is not acceptable to simply indicate clients. Also, in Part 4, an interest in real property held by the business is listed, but it is not a precise address. Either the complete physical address or the assessor's parcel number must be listed. Schedule B is used to report interests in real property with a fair market value of $2,000 or more, such as a rental property or vacant land located within the filer's jurisdiction. Generally, the filer's primary personal residence is not required to be reported. Common errors include precise location not reported, source of rental income not reported, and income from sale of real property sold during the reporting period not reported on Schedule C. As mentioned earlier, when reporting property, the complete physical address or the assessor's parcel number must be provided. Since County Road 20 is not a complete address, an amendment request is required for this example. Just as a heads up, if a filer indicates a disposed date during the reporting period, they should likely be reporting income received from the sale on Schedule C. The bottom of Schedule B is used to report loans from a private lender secured by real property. Loans from commercial lending institutions are not required to be reported, so filers are rarely required to complete this section. Remember, if the filer's disclosure category does not require that he or she disclose real property, there is no need to request an amendment for errors on this schedule. Schedule C is used to report income of $500 or more, such as a spouse's or registered domestic partner's income or proceeds from the sale of a boat, car, or home. Salary from a federal, state, or local government agency does not have to be reported. Common errors include name of spouse's or registered domestic partner's employer not reported, filer's, spouse's, or registered domestic partner's business reported on Schedule C instead of Schedule A2, and the gross income not reported. In the second entry of this Schedule C example, the filer reported his spouse's name instead of the name of her employer. This is a common error that would require an amendment. Similarly to Schedule B, the bottom of Schedule C is used to report loans received, but loans from commercial lending institutions are not required to be reported, so filers are rarely required to complete this section. Schedule D is used to report gifts, such as tickets to entertainment events, gift cards, and meals. Common errors include value of gift not reported, date gift received not reported, and description of gift not being reported. If you received gift questions from your filers, refer them to the Form 700 page on our website, where they can review our very helpful fact sheet about gifts, honoraria, travel, and loans. If the filer still has questions, they should send an email to advice@fppc.ca.gov. This Schedule D example would trigger an amendment request because acronyms are not allowed unless it is a very common one that any reasonable person understands, such as AT&T. The reporting threshold is $50 from a single source in a calendar year. For 2016, the gift limit was $460, and for 2017 and 18, the gift limit is $470. The gift limit applies to a single source per calendar year. If you see a gift reported that is over the applicable limit, please contact us to determine if they were in violation or if the gift possibly falls under one of the many exceptions. While other economic interests are only required to be disclosed if they are located in or doing business in the filer's jurisdiction, there are no jurisdictional boundaries for gifts. Schedule E is used to report a filer's travel paid by a third party, not the filer's own agency. Common errors include value of payment not reported, date of travel not reported, description of travel not reported, and the gift or income box not being checked. If you receive questions about travel, again, you may refer your filers to the fact sheet on our website regarding gifts, honoraria, travel, and loans. If they still have questions, they should send an email with all pertinent facts before traveling. Under the advice section on our website, there is a list of facts we need in order to answer gift and travel questions. These types of questions are very fact-specific. The media reports more about travel payments reported on Schedule E than any of the other Form 700 schedules. When reporting a travel payment on Schedule E, the filer must indicate whether the payment is a gift or income. If a filer marks the income box, he or she is indicating that consideration of equal or greater value was provided for the payment. Dates are not required for income payments, and income payments are not subject to the gift limit. There are also types of travel payments that are considered gifts, but are not subject to the gift limit. For example, generally if a filer makes a speech in the United States, the travel payment is reportable as a gift, but is not subject to the gift limit. Generally, travel payments made by a 501c3 nonprofit organization are also reportable as gifts, but not subject to the gift limit. If you have questions about something reported on the schedule, call us or send us an email. If you need to request an amendment, after reviewing a statement, you may use the amendment request form. Amendment request forms are available on our website. When you receive an amendment, attach it to the filer's original filing. Late fines may not be assessed for filing an amendment, but if you do not receive a response from a filer after sending 2 written requests for an amendment, you may refer the matter to the FPPC. You don't need to review statements that are forwarded to the FPPC. But if a filer whose statement is forwarded files an amendment with you because FPPC requested it, or because they realized on their own something was not reported correctly, please forward the amendment to the FPPC within 5 days of receiving it, keeping a copy for your files. After the annual deadline passes, if you have non-filers, you must follow up with them. The timeframes on this slide are guidelines only. Obviously, however, the sooner you can follow up with non-filers, the better. That way, if someone from the press or public requests a statement that hasn't been filed, you can let them know that you are working on it. You don't need to follow up with non-filers whose statements are forwarded to the FPPC. Please let us know about the non-filer and we will notify him or her. The law requires that you refer non-filers to FPPC enforcement. This is not a discretionary duty. We ask that you send at least 2 written notifications to the non-filer before referring the matter to our enforcement division. We recommend that the enforcement referral be made within 30 to 45 days after sending the second notification. Enforcement referrals must be made through the Enforcement Electronic Complaint System. This slide shows a partial view of the electronic complaint system. It's very simple and quick to make an enforcement referral. Attach copies of your letters and any phone logs or other pertinent information, and include a copy of the most recently filed Form 700 if one has been filed in the past. Filing officers have the option to assess or waive late fines. If you are going to assess late fines, we recommend that you adopt written guidelines. Once you receive a late statement, you can fine up to $10 per day for each day the statement is late, up to a maximum of $100. Late fines go to the State General Fund. Do not assess late fines on filers whose statements are forwarded to the FPPC. FPPC's fine policy is on the website. You can use it as a starting point and modify it to fit your agency's needs in adopting a policy. This is a very important area of the law, different from other public access rules, so please pay close attention. The Form 700 is a public document. This means that you cannot require a requester to complete a request form, nor can you require a Public Records Act request. The law requires that the Form 700 be made available to the public as soon as practicable, but no later than the second business day following the day you receive the statement. Make sure you have backup staff available if you are sick or on vacation. The law provides that you may not charge more than 10 cents per page for copies. This includes copies that are scanned and emailed to a requester. When providing copies, you may not redact any information. Let's see if you can answer this question correctly. A reporter calls and requests a Form 700 for a board member. What do? A. Tell the reporter to call the FPPC. B. Make a copy and email the Form 700 to the reporter. C. Demand that the reporter submit a Public Records Act request. Option B is the best option. You could use option A if the statement is one forwarded to the FPPC, but B is the better option. You should always provide copies of the forms upon request. And, as we discussed earlier, you may not require a Public Records Act request. This is the mandatory retention period for Form 700s. Retain originals for 7 years and copies for 4 years. You may retain statements longer than required, but you must provide public access to the statements as long as you retain them. Hard copies may be scanned or transferred to an electronic space-saving device after the originals are on file for 2 years. This is a screenshot of the FPPC's homepage with directions to get to the Resources for Filing Officers section. This section contains a lot of helpful information and useful tools. There are also links to FPPC's electronic filing system and Enforcement's electronic complaint system. This slide contains the contact information for the FPPC. Electronic filing questions should be directed to Form 700 at fppc.ca.gov or Renee Robertson, your state agency contact. If you have questions about your filing officer duties, or if your filers have questions about what needs to be reported, use the advice at fppc.ca.gov email or call our toll-free advice line. The phone advice line is open Monday through Thursday from 9 a.m. to 11:30 a.m. Thank you for taking the time to watch the video for State Agency Form 700 filing officers. This concludes our presentation.